So the company that you own stock in had a great event happen and it went down. What's up with that? So I'm going to go over today some of the reasons why that could happen. For an example, recently Costco hiked its membership fee. And that's great news for Costco, the company, because if you don't know, that's how Costco makes most of its money. It makes it from membership fees, not from the products or services it sells, which have very low margins, or they price it so it has low margin. If I look at a search on Google, basically when I ask it, what's the percentage of earnings that come from membership fees, the numbers are pretty high. So people speculate 72% or 50% or 72% again. So whatever the number, it's a high number. So the fact that Costco raised its membership fee for the first time in 7 years, that's big news for the stock. So that was pretty recent. And if I were to let you guess on what date it happened, what date would you suspect it happened? Yeah, it happened right here. So they announced right here after the close of the market. And then the next day it opened and it went down over 4%, which is pretty big for Costco. And not only that, it had a lot of volume. So that tells us that a lot of institutional buyers or investors like banks, hedge funds, mutual funds, and the likes sold it. So why would that happen? I mean, that doesn't make any sense. I mean, like if you saw that headline, you would expect it to jump up from here. Well, I would speculate, and I'm guessing that most of these big funds had some kind of sense that Costco was about to announce this dues increase. And going into that, they were buying and they were holding. And if they did that, they had a great run, depending on where in here that they did that. Even if they did that like maybe a week in advance, you could see this rapid rise here before the drop. So what they call that on Wall Street is buy the rumor, sell the news, meaning there's speculation or maybe even some people already know and have insider information, but it's they buy it before the event happens, so buy the rumor, and then they sell it when it actually happens because the catalyst for the potential spike upwards happened, so they want to dump it at that point. That's one example where buy the rumor, sell the news. People are anticipating something happen, and when it happens, then they sell it off because the run up has happened and the actual event has happened itself. Another common reason that that happens, where the actual event, the stock goes down, is stock splits. That's very common. So if we're looking at Amazon's stock split earlier this year, you'll see here's the split, and then it started to sell down after that. So, but leading up into that, it has this run up right here. And so people are anticipating good things happening as a result of the stock split, which is kind of true and kind of not true. So it's kind of not true because the earnings aren't actually going to increase and the business isn't going to get better as a result of the split. The split just divides the shares and creates more shares. So it just changes how the ownership is allocated. A lot more people will be owners and it's split in more directions. So that's why it's kind of not true, but it's kind of true that it could create more value in the sense that usually when they do these splits, it makes it more affordable for retail investors like you and me. So more people could buy it and more people could drive it up. Also, it makes it more affordable for people to buy options because when you're buying an option, you're buying actually the rights to exercise an option at 100 shares. So when that comes down, that also makes options more affordable. So it's kind of true and kind of not true in terms of splits, but you could see here, like the price is kind of, it's kind of between here and here. And so if we were to kind of ignore that split event, it goes down here, and then it goes up here, down here, down here, before it finally breaks out of that range and breaks upward. But you could see this kind of upward movement is where it's approaching the split and people getting excited. And then that event happens and then it kind of peters out. And similarly, if we look at Broadcom, which had a recent split, has kind of a similar pattern. So you see it bumps up right leading into the split, and then after the split, it just starts going down. So you can see that's just a common phenomenon that often happens with splits. So those are just two examples of where people are anticipating an event, and when the event actually happens or it's announced, then it goes down. So buy the rumor and sell the news. So if you know the rumor ahead of time, then hold it until that news happens. Get ready to sell.